So the Union budget for 2022 is out now. In this video, we are going to try and discuss what were the positives and the not so positives out of this budget. This video is not an exhaustive video, so if you do want a lot of details about what's happening with the budget, you can go on this website called indiabudget.gov.in and all the details about the budget are available here. We've also picked up majority of the information from here. Our idea is to look at what are the key pointers in the budget and how has this moved over the previous year when we look at the data and we look at decoding that data, right? Before we go any further ahead, we are going to talk about some terms that again keep getting used in these budgets, right? So when you get the budget figures, you keep getting these terms like the budget estimates, revised estimates, then there are provisional figures, and then there are actual figures, right? What does this mean? So on the 1st February of the year, right, on any of the years, the 1st February, the government is going to come and announce the budget. So for example, this year, the government comes and announces the budget for the next financial year, which is FY23, correct? When we look at this budget, this is called the budget estimate. This is an estimate for what is going to happen in the next year. The government did this last year as well. So if you look at last year's data, now they have more information about FY22. The current financial year we are in, right? So along with the next year's estimates, the government also gives revised estimates for this year's data. So what's happening with this year? We already have about like 10 months of information that is available. So FY22, the government would give revised estimates. These are called as RE or revised estimates in the data that is given, right? Once the year is over, somewhere in the month of April and May, we will get the provisional figures for the financial year, right? And then once we get more data around that, we finally arrive at the actual figures for the financial year. So typically 2 years ago data, you'll have actual figures also which are available. You'll keep seeing these terms in some of the budget documents that come across. The first task that we have to do is we'll have to compare the budget estimates of the previous year, which is the previous budget. So this financial year, FY22, we have to compare the budget estimates against the revised estimates for this year, right? And then we compare what are the budget estimates for the next year to try and decode the major portions of the budget, right? So let's see. We already know कि government has receipts and government has expenditure. Receipts जो भी inflows government के हो रहे हैं वो receipts के अंदर आएंगे. So your revenue and your capital receipts will come under this. एक्सपेंडिचर जो भी गवर्नमेंट का आउटफ्लो है, जो भी एक्सपेंडिचर गवर्नमेंट कर रही है, दैट इज काउंटेड एज एक्सपेंडिचर विच विल इंक्लूड stuff again around infrastructure spending, again salaries, interest payments, subsidies, all those things would come under expenditure, right? So that's the construct of the budget. Let's compare the budget estimates for financial year 2022 versus the revised estimates that were announced this year, right? So let's take a look. You'll note in the top part of this is the revenue receipts, which is all the receipts that are going to come on account of recurring revenue of the government, primarily tax revenue and non-tax revenue. Non-tax revenue being the dividends that the government gets from all the PSU entities, right? There are capital receipts, which will include any recovery of loans, any receipts on account of disinvestment. So these are the other receipts that we will see. And you'll see any borrowings that the government will have to eventually take in case their expenditure is more than the income that they are making, correct? So if you look at the estimates last year in the budget, the government had given an estimate of 15.5 lakh crore as tax revenue, 2.4 lakh crore as non-tax revenue, 0.1 lakh crore as recovery of loans, and 1.8 lakh crore as other receipts, which is disinvestment. Now let's see what happened in the revised estimates. This year has been really good for the government in terms of their taxation collections, right? We're already sort of exceeding estimates there. So the government comes and announces that for the tax revenue, which is net to the central government this year, you're going to see an uptick, right? What was estimated last year in February, we seem to be over, achieving that. So there's an extra 2 lakh crore that's going to come. So that number has been revised to 17.7 lakh crore. Dividends from PSU entities, etc. has been higher. So non-tax revenue has also gone up, right? Combined as these two figures go up, your revenue receipts also kind of go up in that context, right? Capital receipts, however, see a downtick on the disinvestment front. On the disinvestment front, the government was not able to achieve the target, unlikely to achieve it till the end of the year as well. So we are kind of going to miss that by about a lakh crore kind of a number. So that instead of 1.75 is now going to be about 0.78 or something of that sort in terms of lakh crores. So that's the data with respect to the other receipts that you see there. Because the government was able to get higher tax revenues, right? Because tax revenues were higher, the government was also able to spend more. In addition, the GDP growth estimates were slightly better than what the government had initially projected in the budget estimates, right? Given that in mind, you will see that both revenue expenditure and capital expenditure have kind of been revised upwards, right? Despite this, and there's an increase of about 1 lakh crore in the fiscal deficit number as well. But that number doesn't change as a percentage of GDP dramatically, because the GDP estimate itself was slightly, bettered in the context of the revised estimates that are there. So this is the construct of the revised estimates. The key part here being that the taxation revenue was much better than what the government had expected, and consequently the government was able to kind of spend more despite having lesser revenues on account of disinvestment proceeds, right? तो ये तो हो गई बात previous data points और this financial year. अब हम बात करते हैं next financial year की, right? Which is now we're going to look at the FY23 budget estimates. Next year क्या होने वाला है? Look at the data. And now we have added a column for the next year budget estimates, and we have a column which is the growth versus the revised estimates. We are more concerned about the revised estimates now. Budget estimates are anyway a thing of the past for the previous financial year, right? So for FY23, the government continues to expect tax buoyancy. Taxes are going to remain high and tax collections are going to remain high, and which is why the government has given a target of 19.3 lakh crore. This is net to the center. Remember, the gross tax collection is higher, but about 1/3 of the gross tax goes to states, correct? Non-tax revenue, there's a slight dip that the government is kind of looking at, which is at 2.7 lakh crore, but that's minor dip as compared to last year. So your overall revenue receipts are expected to go up by 6%, right? Taxation going up by 10%. That's the key sort of yardstick that's playing out here. The government seems to be suggesting that economic growth is sustainable, and so consequently you will see this improvement in terms of tax collections next year as well. What is down is disinvestment proceeds. So it seems the government is going slow on the privatization or disinvestment theme in that context. That was a big positive in last year, but this year they seem to be sort of slowing that down purely because I think buoyancy in tax revenues has been reasonably good. Revenue expenditure has been running high for the last couple of years. Given the pandemic, the government had to spend on a lot of schemes. So it's likely that the revenue expenditure data is going to remain sort of constant. It's not going to go up too much as the economic recovery takes shape. But the extra inflow that the government is getting on account of taxes is being used in a significant jump in capital expenditure. So very, very clearly the government is focusing on infrastructure. The government is focusing on increasing the capex that they are doing, and so consequently that number has gone up to something like 7.5 lakh crore. Last year's budget estimate was 5.5. We ended up with 6 lakh crore. The year before this was 4.5 lakh crore. The year before this was 3.5 lakh crore. So from 3.5 lakh crore in 3 years, we are now estimating capital expenditure to be 7.5 lakh crores. Historically, this used to be about 12% of our overall expenditure. Now, if you note, this is approximately about 20% of the overall expenditure. This is relevant because this is a clear push towards infrastructure that the government is giving in this budget, correct? The government's data point suggests that the difference between your expenditure and your receipts, which is these two and these two put together, that's going to be your fiscal deficit number. That's 16.6 lakh crore. That's also going to be your borrowing number because you have to borrow that in order to sort of take care of your fiscal deficit, correct? This will be 6.4% of the nominal GDP of the country. So if you back calculate, your nominal GDP arrives at about 260 lakh crore, 2.6 crore. That implies a nominal GDP growth of about 12%. The government has already stated about 8% real GDP growth is expected next year, and so we're expecting about a 4% inflation number as well that's going to come. So real plus inflation is going to be nominal GDP growth. Fair enough. So that's the construct of this data that we are looking at. What are the key highlights or elements that come out of this, right? So in terms of the government stance, last year the government's budget was very clearly growth focused, and they had mentioned that fiscal deficit is going to run high. Historically, we have tried to control fiscal deficit in the 3 to 4% of GDP range. Last year we ended, we are showing it as 6.9%. The coming year we are suggesting 6.4%. So very clearly the government is prioritizing growth over prudence. Growth is the key aspect that the government is coming and saying, okay, we are going to spend, हम spending करते रहेंगे, जिसकी वजह से growth होगी. We are pushing for the growth. If that means that we are keeping fiscal prudence aside for a couple of years, that's okay, right? Typically, from an economic growth perspective, this is a good indication that the government is continuing on this path. Of course, it comes with its own set of challenges, in the sense that the government will have to borrow more, and that will have its own impact on bond yields and interest rates in the economy. But at this point of time, I think the line that the government is showing is that growth is more important, and we are going to focus more on that growth aspect of things, right? The growth in terms of spending is not just spending anywhere they want. The spending is also very clearly focused towards higher capital expenditure. So the government is saying, okay, let's do a major infrastructure push. Capital expenditure has gone up significantly over the years. We already said 3.5 lakh crores in FY20 has now become 7.5 lakh crores in FY23. So there's a massive push that has happened towards infrastructure, and this is good because in the longer run this creates economic conditions that are conducive to more business growth, and consequently will increase the government revenues in the form of taxation at some point of time, right? Tax revenues are consistently buoyant. That's a very good sign, in the sense that I think income tax growth rates in India over the last 8-9 years is close to 12% CAGR, right? Corporate tax CAGR is lower, but that's because we gave a massive corporate tax cut in 2019, and despite that massive corporate tax cut, the corporate tax collections have remained buoyant. They've picked up this year as the economic growth kind of revived and a lot of companies started reporting profits and all, right? The disinvestment numbers is something that is a little bit of a downer. We would expect that the government was doing disinvestment because they did not want to be in certain businesses. If you're doing disinvestment because you do not want to be in certain businesses, then you should not be going slow on that at all. You should probably use that as a mechanism to expend more on capital expenditure as you can go along. But it seems the government is saying that, okay, we're getting good tax collection, so no immediate requirement to kind of offload more in terms of disinvestment. This, in my opinion, would be a minor negative if you would look at it in terms of, from the strategy perspective. I think agar government businesses se bahar nikal rahi hai, the government should play the role of a regulator and not as a player in the markets. That was a good sign that they were kind of indicating again and again. Let's see how that pans out. Right? No major tweak in taxation rules. It wasn't really expected, to be honest, because this is like the mid-year budget. There's no real room to kind of cut taxes immediately. It's okay, the government needs this money because they're also spending a lot more given the pandemic. So there wasn't really an expectation of massive tax cut in the first place in any of the segments, any which ways, right? So to that extent, I think it was on expected lines. The good part was that given that the country is going into multiple assembly elections this year, there was a section of the economic forecasters who were expecting that possibly you could see a lot more populist statements coming out in the budget. Luckily, none of that happened. So that was a good part that kind of came in. All in all, it wasn't something that was very surprisingly or significantly different budget from what we had seen last year. Last year, the government had given a very, very clear indication that they are going to prioritize growth over fiscal prudence, and that was the significance of the budget last year. This year just continued on that line. So for all practical purposes, there was no real surprising information or new information that kind of came out of this budget in that context. They're continuing on that path, and that's a good thing. They were expected to increase capital expenditure because that has been the problem over the years, and as taxation collections become buoyant, you would expect that the government would invest more on the infrastructure side of things. That creates jobs, that creates sort of a longer runway rather than spending it in revenue expenditure, which might give you immediate consumption but doesn't sort of create longer term jobs in that context, right? So in that context, I think the expenditure towards capital expenditure is a very good sign, and that continues. So that's a positive out of the budget. All in all, decent budget. There was nothing really to look at it and say that, okay, this was not good in the budget. Nothing like that. So more or less, I think ticks most of the boxes, but nothing earth-shattering either. It was on the same path that was continuing last year. So they're continuing with the same policy perspective that is going on, right? So that's broadly it. Quick disclaimer, please do not treat this as a recommendation to go and buy or sell any securities or sectors. These are some of our opinions that we have kind of expressed in this particular video. And this is not an exhaustive report. As I said, if you want an exhaustive report, तो आप indiabudget.gov.in पे जाके details देख सकते हैं. वहाँ पे आपको details मिल जाएंगे. If you like the video, subscribe to our channel. Thank you.